We all know that the EV revolution is on the verge of taking over the traditional internal combustion engine. Along with the increasing growth of electric vehicles, there is also a growing movement in the transition towards solar energy. Solar panels are in the midst of a cost curve decline, just like electric vehicles are. As solar technology improves, solar panels will become more and more economically appealing in comparison to traditional energy. With the Biden administration clearly intent on expanding our reliance on solar energy, along with solar being more widely accepted, this leaves a lot of potential for investors in this space. Over the past few weeks, I've been doing some research on this space, and I have concluded that there is one company that is set to become one of the major beneficiaries of the solar boom. And no, it's not Tesla, which is also a solar play, but it is still worth looking into. In this video, I'll be discussing a recent SPAC that is believed to be the leader in the residential solar market for years to come and currently has a lot of white space to grow. Welcome to Cascades Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Instead of waiting until the end to tell you the stock, I'm going to say it right now as usual. The stock I'm going to be talking about today is Sunlight Financial, ticker symbol SPRQ. Now before you search this stock up or have preconceived notions, let me explain why I see Sunlight as a low-risk, high-reward investment for the solar boom. Chamath Palihapitiya, the CEO of Social Capital, actually led the PIPE investment in Sunlight Financial, and it's for a few key reasons. Sunlight Financial is not a solar panel manufacturer like Tesla, Sunrun, or SunPower. Instead, it is a leading company that is behind these solar manufacturers, which I'll soon explain later. In fact, the company is actually partnered with Tesla and will benefit from Tesla's innovative solar panel improvements. Sunlight's dominance creates an outstanding moat for the company, and it's actually priced at a relatively low valuation. All of these reasons and more lead Chamath to believe that Sunlight's gross revenue will 3x in 3 years. With that being said, let's start with what the investment play with Sunlight is. The investment play I see with Sunlight is called the pick and shovel play, which is a strategy named after the California gold rush. In the gold rush, people would purchase a pick and a shovel for a chance of finding gold. After they purchased a pick and a shovel, they would have a chance at finding gold. If they found gold, they would be rich and lucky, but if they didn't find gold, then they would lose time and money. At the end of the day, the real people that were making money in the gold rush were those that sold the picks and shovels. That way, instead of investing in what we believe is the next huge solar panel manufacturer, we should invest in the company that supplies the materials and financing for solar panels. And no, Sunlight Financial is not a mining company. In simple terms, Sunlight Financial is a technology company that uses artificial intelligence to give loans to customers that want financing for solar panels. This is done through a straightforward buying process. Typically, when customers are purchasing solar panels, the process starts with solar installers like Tesla who give a quote to potential customers. Usually this quote will be around $10,000 to $30,000 for solar panels, depending on the size. The problem with selling these solar panels is that most customers don't have $10,000 or $30,000 lying around. So because of that, most customers will need financing for the solar panels. This is where Sunlight comes into play. The installer will direct the customer to Sunlight Financial's website or app. Once the customers are directed to Sunlight, they will be given access to Sunlight's proprietary technology platform. On this platform, Sunlight has a series of questions that customers will answer. After the customers are done answering those questions, an automated decision is completed by Sunlight's AI platform. The customer will now have many choices for their loan, which vary based on interest rates and loan periods. Typically, Sunlight's loans have a loan period that ranges from 10 to 25 years. Depending on this fixed time period and customer's credit rating calculated by Sunlight's platform, a certain annual interest rate is offered. Usually, Sunlight's annual interest rates come in at roughly 2 to 6%, according to the Sunlight CEO. After the customer chooses to purchase the solar panels with that loan, Sunlight will sell the loan to capital providers for a pre-negotiated price. These capital providers include banks, credit unions, and other institutional capital who want to purchase these loans. Ultimately, Sunlight will be given a commission fee for connecting the capital providers to the customer and for calculating rates with its AI platform. From the capital provider's perspective, this process makes a lot of sense. Instead of spending time marketing a solar loan service, they can simply purchase loans from Sunlight Financial that have a fee attached to it. After all, creating a solar panel service is not easy. Sunlight has a strong moat built off of its existing network of partners and its data advantage with its AI platform. In fact, Sunlight works with 1,000 solar contractors and installers, including 9 out of the 10 largest solar installers in the US. And yes, that includes Tesla, which we will go more in depth on later. From Sunlight Financial's perspective, its business model is fantastic. First of all, capital providers have to compete with each other to purchase Sunlight's loans, which lowers loan rates for the company. Additionally, not a single paper or dollar is used throughout the lending process by Sunlight. Top it off with the fact that as Sunlight gets more data from its platform, its automated decision making only gets more and more accurate. For the solar manufacturer, using Sunlight is a no-brainer. Approximately 90% of all solar installations are done via lease or loan because of how costly solar panels are. Not only that, but Sunlight offers the lowest rates out of all of its competitors, which we will soon cover. Lastly, for the customer, obtaining a loan makes a lot of sense. Paying the monthly bills for a solar panel is actually cheaper than using fossil fuels. This is because of the length of the payback period for solar panels, or the time it takes for solar panel savings to pay off the cost of the solar panels. So after the solar panels are used for a certain number of years, then the rest of the years will be just free energy or pure profit. The typical solar payback period is roughly 8 years, and for Tesla's solar panels, this goes down to roughly 6 years according to the website. Since loan periods usually range from 10 to 25 years, this means that the amount of money paid per month is actually lower than the monthly payment fossil fuel companies charge. As a result, it's practically a no-brainer to take a loan out for solar panels most of the time. Because of this, most customers pay their loan payments, as otherwise, they would have to pay an even higher bill from a fossil fuel company like PG&E. Here's the CEO explaining how loan defaults work with Sunlight Financial.
Right, and so what about when things have gone south, do you show up one day and just take off the panels? Is that how it works?
Yeah, so first step, of course, is trying to work with the customer. Yes. The first step is work with the customer. The second step is they're making payments, and so reminding customers and working with our capital providers to ensure that our capital providers are reminding customers that continuing to make your payments in many cases saves you money. And so very often, as we've had those conversations, or our capital providers have had those conversations with customers, and they're reminded of, wow, that $100 payment is actually saving me money each month. That's enough to kind of change the perspective of who gets paid. And then additionally, if the customer doesn't make payments over time, we have the ability to turn the system off. And so those savings go away. And then finally, we do have the lien on the equipment.
Now that we understand what Sunlight Financial is and why its service is beneficial for everyone, let's take a look at the growth opportunity for Sunlight along with its competitive edge. As I mentioned earlier, Sunlight Financial is easily the market leader in the solar loan industry. They've partnered with over 1,000 independent contractors and 9 out of 10 of the largest solar installers in the US. This is mainly because of Sunlight's proprietary credit strategy with its AI program, which is solidified through its already massive database of customers. As we can see with this graph, Sunlight's credit quality is easily lower than its 2 other major competitors. Because of Sunlight's domination in this industry, its growth has been outstanding. More and more capital providers are looking to purchase Sunlight's loans, which will lower the loan rates for Sunlight by keeping demand high. Not only that, but margins are increasing through the economies of scale and through its remarkable competitive edge. Also, do note that there is no customer acquisition costs because Sunlight is already connected with its network of partners. This lowers margins by a substantial amount. The main growth driver for Sunlight is easily the growing solar market. The cost of solar just continues to decline while electricity prices continue to rise. From 2017 to 2020, the price for solar has decreased at an average rate of 9.3% every year. Additionally, solar is also expanding into more and more states. Even with that, solar has only penetrated 3% of the market, which leaves plenty of room for growth. What's more interesting is that Sunlight can benefit from Tesla focusing on its solar panel service. We've seen Tesla revolutionize electric vehicles and show traditional auto that electric vehicles are the future. Most recently, on Tesla's Q4 conference call, Elon Musk stated that Tesla is focusing on the solar side of its business, and he thinks that Tesla will easily become the market share leader.
We had our best quarter since, I think, 2018 in Q4. So we do actually expect to become the market share leader in solar and then go far beyond that. Unfortunately, there were a few years there where we had to devote the whole company to Model 3 production and building. We have to basically take the whole company, including a bunch of people that were on solar, and have them work on cars. But now we've got a little more bandwidth. We're putting a lot of attention on solar, and it is growing rapidly. So I think it will not be long before Tesla is by far the market leader in solar.
Now, even if Tesla doesn't come on top, Sunlight would still benefit, as it does work with 9 out of 10 of the top solar installers. Nonetheless, the prospects of Tesla expanding the industry could provide a significant amount of value to Sunlight. Now we need to cover what's seen as one of the most important parts of stock analysis, which is Sunlight's valuation and my personal prediction for the stock. Like I mentioned previously, Sunlight Financial is going public through a SPAC, or Special Purpose Acquisition Company. The stock currently trades under the ticker symbol of SPRQ, which will switch its ticker symbol once the transaction goes through. At a $10 share price, the valuation for Sunlight is $1.267 billion. At the time I'm recording this video, Sunlight is valued at a little under $13 a share. This puts its valuation at $1.64 billion, assuming a share price of $13 or a 30% premium over the price that private investors like Chamath get. At this valuation, Sunlight has a price to sales ratio of around 23 by its 2020 projections. Its PDE ratio by Sunlight's 2020 projections is 99, which is relatively high priced. At a first glance, these ratios would seem very expensive, but margins are expected to be extremely high for Sunlight. Sunlight's expected 2021 price to sales ratio is 13, and its expected 2021 PDE ratio is 46. Both of these ratios are already much lower than 2020 projections, but it gets even better. Sunlight's expected 2023 price to sales ratio is 8, and its expected 2023 PDE ratio is just 22. By then, a company growing as fast as Sunlight would easily have a price to sales ratio of 16 and a PDE ratio of 44 for its sector, especially considering that margins are increasing rapidly even after 2023. Because of this, Sunlight has a clear path to 2x within 3 years by my calculations. Of course, it may not be a 10x increase, but the stock to me seems like a low risk, medium reward opportunity. After all, a 2x return in 3 years would still be an average stock appreciation of 26% per year. We weren't given any revenue or profit projections for 2025. For that reason, by 2023, we will have to take a look at this investment again. Let me know whether you are investing in Sunlight Financial or not. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.